Just picking up some articles on oil because I got out of my oil position and I shouldn't have. I'm sitting on cash and I was waiting for a pullback and I've been waiting for a pullback. But obviously, if you wait long enough, there's going to be a pullback someday, right? I got actually tell you the truth. I was sitting on UCO on a heavy bet since back in February 2011 due to LW's predictions, which hit $75 a barrel twice. And once I got the money back, I said, I'm getting the hell out of here for a while because I'm getting sick of it. That's what I did. So I'm never listening to that guy again, believe me. United Nations nuclear watchdog said that Iran had sharply stepped up work on uranium enrichment. I don't know if that's true or not, but maybe. But a lot of people think it's true. I think, like I was saying, though, like people don't want to hear this. Some people don't want to hear it, but just using plain common sense. There's no way in hell they're not trying to get nuclear weapons, because if this was strictly for electricity, it is costing them so much money in sanctions, military spending, having their bank accounts frozen, and they're sitting on all the natural gas and oil supplies in the world. They're hardly getting anything out of electricity out of this nuclear program. It's a joke and a half. It is for nuclear weapons. Now, you can say that's okay or whatever, but I know there's a lot of other stuff going on, but I'm not so stupid as to believe it's not for nuclear weapons. That's a given. That's a given. Now, you could say they should have them, fine, whatever, but I already know what the deal is with that. But the S&P 500 closed at the highest level since June 2008. I find that pretty interesting. We could be running into, not next week now, but we could be running into the same kind of scenario that happened in 2008. Oil prices spike, it crashes everything. Now, they haven't spiked enough yet. It's still not even $110 a barrel. But, I might be smart. I don't know. I don't know if I'm smart or not. But I'm going to tell you one thing. Whatever I say I think is the way it's going to go, well, obviously, I'm not Karnak the magician. That's where I'm putting my money. And net effect is I usually win. So I don't do too bad at this stuff, but I don't always get everything right. But the major reason is that traders are trading up the oil right now is a major concern that Israel will try to bomb Iran's nuclear enrichment facilities, and that's quite obvious. But there's a limit to how much they're going to bid up the price of oil right now until they actually attack. And that is actually the whole thing that you got to figure. When is this attack going to occur? I think it's a given. Now, if Cheney was in office, I think we would have had it as soon as he got in office. But, I think a lot of things aren't like set in stone. It depends on who's running the show. But the markets there are convinced that there'll be some type of confrontation. That's quite obvious, says the Chicago-based Phil Flynn, an energy metal analyst at PFG Best, a broker. People around the globe are scrambling to get supplies. But there's something else. There isn't hardly any demand for oil right now. The economies are kind of slowed down. And it's strictly over this possible perceived attack. And right now, it's not like anything's affected that much. And this is one little statement I just picked out because it just keeps in my mind, because I keep thinking this junk is going to pull back. Eventually I'll be right. Just say it long enough, But obviously I should have kept my money in there on a UCO, and I would have been ahead quite a bit. I was stupid. Like I said, I got sick of holding it from over a year ago from LW's predictions. He goes, this thing's, and this is something I picked out, this one sentence here. If we can avoid a confrontation with Iran, the market will collapse because the demand is really not there. That's one reason. If you got this stuff and you're holding, keep moving up those stops, because I got a feeling they're going to pull the rug out from underneath this garbage. And they do this. I think it's all done on purpose, you know. I think the game's rigged too. It's an old expression, you know. It's an old expression. The game is rigged. You know, everybody says that. But I don't really just say the game is rigged and I don't try to play. I try to beat the odds. That's what I do. I try to think about what they're going to do. This is the, let me get back to the oil chart. This is the oil chart. And, you know, this is something else I keep thinking, you know, it's going to happen again, because the S&P right now is approaching the high the highest it's been since June 2008. Now you're looking back here, June 2008, and oil was about 124. So we might consider, you know, I'm going to keep looking at various signs of what's going on. For one, you know, next month's global manufacturing index is going to be coming out. Now, if it flattens out or goes a little lower or goes a little higher, that's going to be an indication of what's going on. Not, you know, it's not going to give you the short-term price movements of oil, but it's going to give you some general market conditions of what's coming down the road. So I'm watching this thing very carefully. So, I mean, here it is, the end of February coming up, so we should have some new statistics in here, see what the heck, what's going to happen. Now, I would like to get these statistics as early as possible, because if this is up and silver had a little bit of a pullback to, say, like 34 or something, whatever the hell it would be, I think I'm going to go in there for triple leverage pretty hard, or more than I did before the last time anyway. And maybe I'll just leave some on the side for oil, you know, for an oil pullback, and get rid of some of that Sprott garbage. Because actually I'm getting entirely sick of that, because I should have been doing what I've usually been doing. I've been using leverage on different things, and if I look at the regular, you know, statistics that are out there and not try to go by some special inside information, you know, I usually do a hell of a lot better. So again, this is the oil chart, and you know, it's, you know, I just want to, like, if you look at the daily chart, you could see that there's been some serious, you know, pullbacks. If you look back, you know, here, you know, I mean, there's been some serious pullbacks from here. This is 106 to 96. Here was another one from 113 down to 105. Now that might be the type of pullback we're going to get. The new range might be 115 to 105, you know. But when you have a pullback, commodities seem to never really go straight up like a rocket too much. Not all the time. They seem to pull back a lot faster. And that's the one thing you got to watch, especially with oil, because, you know, I keep picking out this one sentence. If we can avoid a confrontation with Iran, the market will collapse. And, you know, it would, because if there's a supplies of oil are being stockpiled in different places, and there people are buying in lieu of something happening, and all of a sudden the news is that nothing's going to happen, this market will go down fast. It's like you don't notice, though. You don't notice. So I'm waiting for a pullback now, you know. Before I was waiting for an explosive move upward. Now I'm waiting for a pullback. You know, I could be doing a damn wrong thing again. But I don't know if they're going to attack or not. But I'm going to look more into silver right now. And, you know, I'm looking at, you know, typically what happens. Silver will move up very hard with oil. And, like, in other words, when oil was going up last year from this low, I don't know, like 85 or whatever. And see, I bought a lot of stuff down here. That's why I didn't get killed on low double leverage. And I also rebought down here, like when it was below 80. You know, I think it was think it was in October. I bought way down here, some real cheap amount. That's why I broke even with it. But if I would have held on from this rise, I would have had a nice good chunk of change up with that, and I'm sitting in cash right now. But I'm thinking still it might pull back. It might pull back because I do think these markets are rigged in some ways. But we'll let them play their game. I don't want to get all hyped up and get in here right now. It might actually go all the way the hell up to here for all I know. It might actually go to 115. That is the typical standard thing. The next range of oil is going to be 105 to 115. I'll wait for it to pull back. I'll wait for it to pull back. But also during this time period, it went from 85 to well, actually you really couldn't catch it at 113. I think it was more like 111. Like if you're looking during the day, because these were like some of these times were like after hours or something. So you had about a $30 price, maybe a 30% increase or more in the price of oil. But if you look at silver, I mean, silver went a hell of a lot more than that. It went like more than 60% easily. I mean, even from $30 on, it went up to almost 50. So it was a huge move. So I'm thinking the same kind of scenario is going to happen all over again, and you're going to see this. You're going to see this. So I'm not going to get out at the right point. I'm going to start. If I start getting into this double leverage stuff, say it pulls back to 34 something, and I look at this and this next month is up higher, that's going to tell me, and oil's still kind of floating up maybe, I don't know, that's going to tell me to get into silver. I'm going to go into triple leverage and just hold it a little longer, see what happens. Hopefully get like a 50% gain or something like that. And as far as the oil, I'll buy back the oil only upon if it pulls back. And I'm talking like a good pullback. In other words, if it goes up to 115, I want it to pull back to close to 105. If it starts pulling back from 110, I want it to get close down to like 103 and buy there. And I'm probably going to buy double leverage. I'm not going to try to buy that triple leverage Brent, because I think that fund is kind of thinly traded. So I'm going to stick with the UCO. But I think the biggest gains, if you catch them right, is going to be on a triple leverage silver. And it's been an old principle, like I stated, that when oil moves hard, a lot of times that's gold moves hard, and then the silver moves hard, and you're going to get the most gains out of silver. And right now it's still low enough that it's not scary to jump in there. Oil's scary to jump in. Now, I was stating it when it was 100, thinking 100 was pretty high. That would have been nice, 10% move. But silver pulls back to 34.40 and it goes up to 38.40. That's more than a 10% move, and if you're using triple leverage, that's a 30% move. So you're talking some good gains there. So I might be doing that. But that's kind of my plan, and I want to watch very carefully when this next stats come out for the global manufacturing index, and also very carefully on oil pulling back, because all you got to do is have all the financial media out there start talking about, well, there's no confrontation in Iran, we reached an agreement, oh they said this, and all the peace doves come out, and watch the oil market collapse. I mean, if I control all the financial news, I don't know if there is anybody that controls it, but I think there's games that go on. I mean, it's the same old game. It's been going on probably 100 years. But I think we're going to see a story like this first. But I think eventually they will attack. But they're first going to calm everybody down, let the stuff float down really good, and then it's going to shoot up like a rocket again. That's what I keep thinking. So now I got to wait for a pullback, And I don't know. I mean, this stupid thing can go. Standard practice, though, is right now it's going to hit right around here before it pulls back. If it pulls back, it should go up to about 114. It should. But I don't know that for a fact.